Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us retired Major General O.P. Gulia, President, as well as Mr. Prakash Saraogi, Executive Vice President, Finance at SVP Global Ventures, joining in. Welcome to the show, Mr. Welcome to the show, gentlemen. Overall, if you go to see with regards to where the company is concerned as well, it's one of the largest yarn manufacturing companies, as we know. Let me come to you first, Mr. Gulia. For if you could just help us understand from last March to now, how has the impact of COVID actually been, and how have we seen that transition happen?
You see, in the month of March, somewhere when the lockdown started on 22nd of March, the industry suffered very badly. It was a complete lockdown, and for 1 month we couldn't open anything. And thereafter, the partial opening started. However, the manufacturing activity, the workers had gone away, the staff had gone away, the machines were closed. So it took us some time. And by the month of June, somewhere, we started recovering. And the second quarter generally was taken to recover. And we bounced back strongly in the third quarter. If you look at our figures, we have bounced back much better than what we were in the similar time in 2020. So overall, yes, the first quarter, these losses could not be recovered so well. That is why our overall turnover in first 9 months is little lesser than 2020. However, if you look at 3 months close, we made it up in figures in the next 6 months. It was aided by the sudden shoot up in the yarn prices also, as well as the productivity and all. So we are now comfortable, and fourth quarter you will see is doing much better than the third also.
Right. So, Mr. Gulia, with this kind of performance that we've seen in the first 3 months, are you expecting this kind of performance to continue in the coming quarters as well?
Yes, it will be, because you see, it is backed by certain facts. It is not just that boom because first quarter it was closed down, and second quarter we just boom. It is backed by the technology which the company has. It is backed by the skilled manpower which we have. It is backed by the staff and the workers who are in the company. Also, there are other facts which are in favor of our company. That is the location, the subsidies which we get from the state governments out here, and the somehow two big factors which are helped across the field are the cotton prices have not increased as much as the yarn prices have increased. And the June was somewhere in December, January, and February. So certainly, I am very sure that the fourth quarter will be even better than the third quarter.
Right. So overall, coming to you, Mr. Saraogi, when we see the first 3 months' performance, the employee costs have gone down overall. Finance cost has reduced as well. So are these kind of cost-cutting initiatives that the company has taken? And if yes, are we expected to see them continue from here on?
So, Hiral, let me start with saying that, our promoter, Sri Vallabh Pitti Group, and along with our whole-time director, Mr. Chirag Pitti, their focus has always been on capital and operational cost rationalization. So basically, what I mean to say that, we have been always cautious of where we are investing, what kind of capital investments we are making, what kind of operational benefits it could bring to us as a company. And that's the whole, background behind this low employee cost, or even if you see our borrowing cost is much lower. So now another trend, what you can see is earlier textile industry, particularly spinning or yarn industry, used to be very labor intensive. Now the things are different, with latest machines, with artificial intelligence coming in, the requirement of manpower has gone down. Now the textile units are more power intensive. And with that, since it's becoming more power intensive, we are also moved to locations which give us lower power cost. Our plant in Oman, there the power cost is almost 40% of what we have in India. So, that gives us a relative advantage over our peer group. Similarly, if I again come to the borrowing cost, our cost in Oman for our capital borrowed is again less than 5% per annum. So again, that is very low relative to our peers. Again, in India also, our plant in Jhalawar, there we have got various interest subvention from the government ranging from 9% to 11%. So that overall keeps our borrowing costs also very low. And moving your next question as to whether these would continue, I think the focus is very clear from our promoter group that we will continue to focus on cost rationalization and operational efficiency, and we'll try to maintain or even lower this cost further moving forward.
Right. So with these cost-cutting initiatives, now if I have to look back to FY16 to FY20, we've seen a margin expansion of almost around 950 basis points that have come in. So with these initiatives, Mr. Saraogi, how much more expansion can we see with regards to where the operational efficiencies are concerned as well as on the margin front?
Sure. So let me start with telling you, we had a certain business strategy from 2016 to 2020. What were these business strategies? We were focusing on return accretive capital investments in strategic locations where we have, as I said, various cost efficiencies. Second was, we had a strategy of exiting low margin non-core business verticals. Third was we wanted to change our focus more into compact cotton yarn manufacturing. So we are talking about a change in the product mix. And fourthly, we were also focusing in superior high quality products with global accreditations and acceptance. So these were our four basically business strategy over the last 5 years. And these have basically what you see the EBITDA margins expansion from 3.7% in FY 2015-16 to 13.2% in FY 19-20. And further, as of for the 9 month ending December 20, that was 14%. So this margin expansion, what you are seeing is basically a result of the successful implementation of our business strategy over the last 5 years. So if I talk about the first one, like return accretive capital investments. So we went on and we set up a compact cotton yarn manufacturing plant in Jhalawar in Rajasthan. Again, we were very cautious about the capital investments, what we made. We were very careful about the negotiations, what we did with the government to get a best package for our project. We were very careful in the operational cost rationalization. We tried to keep the costs low. And similarly for our plant in Oman, which has various benefits, as I explained, in terms of lower power costs. It also has various logistical efficiencies because we are located right on the Sohar port. So, it helps us to immediately reach out to the various buyer markets like Pakistan, Bangladesh, China, etc. So, Oman has various advantages in terms of cost efficiencies, which we continue to benefit from. Again, also, as I said that, we change our product mix. Basically, if you see 2015-16, traditional yarn used to constitute almost 80% of our revenue. Currently, that has dropped to 16% of our revenue. So that's how we have transformed ourselves from a traditional yarn manufacturing to a compact cotton yarn manufacturing. Now, compact cotton yarn has its own advantage in terms of better price realizations. And also, if you see when we manufacture the yarn, the output is much more on the machine. So we benefit on both sides. We benefit in terms of quantity and also we benefit in terms of price realization. And third, I said, we are always very cautious of the cost. So we are able to keep our costs very low, which at an overall results in a very higher margin. Now, what margin you see currently, I would say that this will definitely go up from here because traditional yarn still constitute around 16% of our capacity. Further, if you see our Oman project, our spindles unit is still being scaled up. So you can expect to see anywhere between 350 crore to 375 crores further addition to the top line. This scale up is expected to be completed by May end, this May 21 end, or by first 2 weeks of June. So after that, you can see a top line addition, as I said, of an annual addition of around 350 to 375 crores. So that would further increase the contribution of compact cotton yarn in the total product portfolio, and the margins would improve. when you see traditional yarn and compact cotton yarn, there is easily a margin difference of 10 to 12%. So as and when we increase the contribution from compact cotton yarn, our margin goes up. And again with the cost rationalization, we are always heading towards a higher EBITDA margins than our peer group.
Yes. That's an interesting strategy that you're mentioning as well with regards to where margin expansion is concerned. So, Mr. Gulia, overall, with what we hear, with the kind of scale that you are at, currently, what's your market share if you have to look at the domestic market separately and global markets as a whole?
You see, Niro, what is going to happen is that globally, if you look at it, the China is getting a backseat now because of various reasons, and some of them are very obvious. You are aware. Some of them are because the Chinese, most of the manufacturing facilities have been very old, so they are phasing it out. So as it is, the capacity went down. There was a backlash because of the COVID. We are all aware about it. And the third one was even the production capacities went down. So China took a backseat. When China took a backseat, it is obvious that either the US or we are the next three big players and two big players and all. So we step in, and our overall contribution in the world market has increased India as such. So this gave us a lot of advantages in the world market to supply our yarn. And Sohar plant has given us this advantage, being strategically located in a place where European market is covered and also the Asian market is covered. Some of the markets which traditionally we could not have captured from India, like Pakistan and Turkey, are also captured by being there in Oman. So that is why Oman has given us internationally the advantage. Coming down to domestic, this was our strategy always been that international market we capture by being present globally, and the domestic market, the demand of domestic market to be supplied by the domestic plants. And that is where we are today, one in the south, Ramnad, and one in the north at Chalawad. And both are so well located that the country is, the plants can take care of half the country towards southern side, and northern side, the Jhalawad plant takes care of. And even this compact yarn demand, we are also meeting from here abroad and all. So the Jhalawad plant takes care of the international market as well as global. And of course, Oman takes care of the international market.
Right. So what is the market share right now in percentage terms in the domestic market and globally right now for our company?
Prakash, would you have this idea?
Yes. So to give you a background on the industry, Hiral, the current global yarn output is around 40 million tons per annum.
Okay.
Out of that, China shares 54% and India shares 33%. Okay. So we are talking about around 33 million tons per annum is what Indian manufacturers produce. Now, out of this 33 million, 30 million tons per annum, around 3.4 million per ton is around cotton yarn, right? So now we have around 50 million spindles capacity in India, manufacturing this the total output is around 4.7 million tons of yarn, but out of that 3.4 is cotton. So out of this 50 million spindles capacity, if you see, most of these capacities are very old. They are traditional yarn manufacturing, and only 2% of them is like less than 5 years old. So our plant, what I mean to say is that if you take 2% of 50 million spindles, that's around 1 million spindles. Out of this 1 million spindles, we have around 300,000 compact cotton yarn manufacturing capacity, which is set up in the last 5 years. So our Rajasthan plant was set up in 2016 and 17, and Oman was set up in 2019, 20, 18, 19. So basically, what I'm saying is that we are one of the largest manufacturer of compact cotton yarn currently in India and a leading player in the world. Right. So we have a major share in the compact cotton yarn business market.
So in 3 years, Mr. Saraogi, where do we see our market share reaching?
So I think we will continue we will be a leading compact cotton yarn manufacturer in India. we will be one of the leading, because we have a further expansion project in Oman, that is Oman phase 2, which will double the existing capacities in Oman. So as of date, we have like 400,000 spindles and 5,900 rotors capacity, which is there. With Oman phase 2 is additional 150,000 spindles and 3,500 rotors. So after our Oman phase 2 expansion, which is slated for completion around Q1 of 22-23. So once that is completed, we will have a total spindles capacity of 550,000 spindles and 9,400 rotors. So, that is quite a huge number. And I think we'll be among the top 3 compact cotton yarn manufacturing companies in India.
Right. And so currently, what's the capacity utilization that we are working with on a blended basis, if you have to take all the plants into consideration?
So, okay, I'll say that, our plants we have plants in India and Oman. In
Correct.
India, our units, we have around 250,000 spindles unit and around 2,400 rotors unit. All these units are operating at more than 95% capacity utilization. Yeah. And in fact, it's slightly higher than that, but we say that, it's more than 95%. For our Oman unit, where we have 150,000 spindles and 3,500 rotors, our rotors unit is currently running at more than 95% capacity utilization. Spindles unit, as I said, is currently being scaled up. The scale up will be completed by May end or the first 2 weeks of June. I would say that 50% of that is 75,000 spindles, is already running at more than 95% capacity utilizations. And the remaining scale up is in process. Once that happens, we are confident that will also be running at more than 95% capacity utilization.
Right. So with regards to where the expansion is concerned, Mr. Gulia, what's the kind of fund infusion that we're looking at, and if we are looking at expansion, how are we funding the same?
See, as of now, our immediate expansion plans are for the Oman. The similar capacity what we have today, that is 150,000 spindles and around 3,500 rotors, we are doubling it up. So this year we will be able to complete this. The total requirement capex will be around $150 million. Out of this, around 70% we are looking from the debt and 30% from the liquidity, which we have our own. And this has been the pattern of the company. Earlier also, the phase 1 plant was established in a similar manner. We are supported by the state funds of Oman. They have a great confidence in our capacity and in our ability, and that is why the phase 2 will also be supported by them. So this is what the expansion plan and the finance plan will be.
Right. And Mr. Gulia, with regards to deleveraging as well, what does the current debt stand at? How much are we looking to pay off in the current year? And by taking an additional debt for the new capacity expansion, where would we stand at the end of FY22 according to you?
No, Prakash will be able to take on this finance much better. Yeah, Prakash.
Yeah. So now, Hiral, let me tell you that, we have set out our business strategy for the next 2 years.
Correct.
And one of the focus points there is on debt reduction. So as I mentioned that, we set out with a very well set plan 5 years back in 2016, which we have successfully implemented and which led to a margin expansion. Similarly, for the next 2 years, that is FY 21-22 and 22-23, we have set out our goals. And one of them is debt reduction. So recently, how we are addressing this is that, we have taken some debt for our new projects, which we have set up in Oman and in Rajasthan. And now what we are, these are again very low cost debt, I would say. But again, as part of debt reduction, recently we have issued done a preferential issue of warrants for 235 crores. This is done to the promoter group company. Promoters, and the proceeds of this issue of 235 crores is being used to reduce the debt in the company.
Okay.
So this is one way what we are doing. Second, other than that, we also have scheduled repayments over the next 2 years of around between 125 to 150 crores, which would further reduce the debt levels for us. And additionally, with our Oman operations fully being the revenue from Oman operations fully being reflected in our financials, we expect our operational cash flows to go high, and the same part of the same can also be used for reducing the debt further.
Right. So with all of this, when we're talking about expansion, debt reduction as well, are we expecting any change in terms of the product mix from here on?
So on product mix, as I said, that we are already, our focus is on compact cotton yarn manufacturing, and we'll continue to do so. The share of compact cotton yarn manufacturing in our overall overall revenue will continue to go high, and it could be as high as 90-95% moving forward. So that will have a very positive impact on our EBITDA margins and PAT margins.
Okay. Mr. Gulia, coming to you as well, in terms of geographies, what is the kind of expansion that we're looking at, especially if you have to take exports into consideration?
You see, as of now, India takes care of the domestic market as well as the market which is closer to the SAARC countries like Pakistan and Bangladesh and a little bit of Asian market and all. The GCC countries never had any plants of textile and all. So we captured that market by being in Oman. Also, it gives us accessibility to European market to certain extent and all. However, there is a huge market in US and the North and South America and all. So we are looking at capturing that. We have the plans to go into Europe and also in US. The overall strategy is that they meet the demand of each continent at its doorstep. So is within the India, and so is abroad. In India also, the similar thing is look forward and all. Northern side, we are still a little lesser north or northeast side. So we are looking at that, and so in the international market.
Right. And overall, Mr. Saraogi, coming to you, as we mentioned, yarn prices are increasing, cotton prices have not increased. Are you seeing a change in trend happening on the pricing front from here on?
Not really, Hiral, because we have to understand the reason why this price has increased. It's not temporary. We do not believe that it's temporary. It's there to stay in the short to medium term. That's what I see, because it's fundamentally backed by supply chain constraints. So when I say that, if we go back into the industry, you have China, which was the largest manufacturer of yarn in the world. As I said, they have around 54% market share. India was the second best alternative available. Now, if you see over the last 4-5 years, the manufacturing cost of yarn has significantly gone up in China. So, for example, the power cost have increased. It's almost 20% more than in India. The labor cost has increased almost 3 times. So China is becoming less and less competitive to manufacture in yarn manufacturing. So that gives a very big advantage to India, because India also has a sizable capacity to cater to the world market. Further, for China, due to this alleged human rights violation allegations, a lot of big retail giants in US and Europe have cancelled orders. So they are also looking at alternatives. And the best alternative to China today is India. So we see a huge, we see a supply chain constraint, and thereby, benefiting Indian manufacturers like us, who have the latest plant and machinery set up during the last 5 years with, manufacturing yarn of world quality standards with maximum accreditations and certifications. In fact, our yarn, has one of the maximum certification has been recently also registered with IKEA, we have been registered as a preferred supplier to IKEA. So, that gives a lot of credibility to our finished products. So it would definitely benefit, companies like us, which we already have a sizable capacity up and running. And our Oman phase 2 operation plans also are in place. The expansion, what we are doing is on the existing land, what we already have. The existing infrastructure is already there. So it's very easy for us to quickly, complete the implementation. So we see that, with these factors, we see that there will be sustainable demand for our products in the short to medium term. and that would have an upward pressure on the yarn prices, and the margins will also be sustainable in a short to medium term.
Right. With all of this, Mr. Gulia, what is the order book looking like from here on?
See, we are very comfortable in order book for next 2 to 3 years. We are already full with 5,000 crore worth of orders, and the plants are ready to meet that kind of a demand. So 2 to 3 years, the company is at a very comfortable. Even the will take care of the expenses which are happening in Oman. So order book wise, we are good, and as Mr. Prakash said, the certification from various international certificate organizations and all has also helped us. But that the moment they see our yarn, it is yes, the quality is there, and that is how the expansions are taking place. Like Portugal, which are never seen earlier, but we are capturing the market of that. Like Brazil, we are capturing the market of that. So in addition to this 5,000 crore, which is already there with us, we are also exploring other markets where we have not been so far at all. And our location to these global location will give us that reach.
Right. And very lastly, Mr. Saraogi, if you have to look at growth in terms of FY22 and 23, what's the top line and bottom line milestone that we're looking to cross?
So, okay, so let me tell you, Hiral, like our business strategy for FY22 and 23 is based on, one is scale up of Oman operations, which I said we are scaling up the spindles capacity. Second is completing Oman phase 2 project implementation, which we are expecting by Q1 of FY22-23. Third is deleveraging the balance sheet. And fourth is continue to improve our EBITDA margins. So these are the 4 things on which we are working on. Based on this, we can, if we see the current operations, what we have based on the current capacity, which is functional and running at more than 95% capacity, we can see an immediate upside on the revenue between 350 to 375 crores, because once we scale up our spindles capacity, it'll immediately add up to our revenue. So that you can start seeing from the next quarter itself, this quarter itself. So that is one thing. Second is with Oman phase 2 expansion being completed, we can see an additional revenue of anything between 900 to 950 crores. So that will be the revenue addition from the Oman phase 2 expansion, which we can start seeing in FY22-23 onwards. Yeah. So second thing is on the, I already mentioned that on the EBITDA margins also, what we have currently as of December, our EBITDA margins are 14%. But if you really look in the Q3 EBITDA margins, what we have done around 20.6% EBITDA margins for Q3 for the Q3 FY 2021. So that's that explains what margins we are currently running on. Our Q4 is expected to be much better than Q3 because the Q3 does not have the full impact of the increase in the yarn prices. Correct. The yarn prices started increasing only in December first week. So the fourth quarter basically will fully reflect the yarn prices increases. Again, so that is on the EBITDA margins front. We see a EBITDA margin moving upwards of 20%. Wow. Then again on the, if you come to the PAT levels, now there, as I said, that our focus is on debt reduction. So we can expect to see a further downtrend in the interest costs. Right. And one more thing I would like to mention, when we set up the plant in Oman, that is in a Sohar free zone. So that means that we have tax exemption for 25 years. Wow. We would not be required to pay any tax for the next 25 years. So that means higher repatriable profits from that to the parent company.
Absolutely. I think the roadmap looks pretty interesting for the company as well. Thank you, Mr. Saraogi. Thank you, Mr. Gulia, so much for joining us on the show. Always a pleasure to speak to you. Hope you enjoyed the conversation as well. Thank you. Stay safe and speak to you soon again.
Thank you, Hiral, so much.
Thanks.